guys, Akil Stokes here, and welcome to episode 103 of the Trading Blog. If you guys are new, I am a professional trader as well as a trading coach over at tradingpower.com, and this is a blog video that I like to do. I used to write it, now I record it, but I like to provide it to you in order to give you guys some insight on how my trading has been, and also just give you some advice, give you some tips that can help push you in a positive direction in your trading journey. Now, today is a very special day. Why? Well, I'm celebrating my birthday, my 21st birthday. Somewhere around there, I forgot. And, well, the market gods were pleasant enough to deliver me a pretty rough day. Now, it could have been worse. Didn't lose any money today, but today was a day of missed opportunities. There was a missed opportunity on the pound dollar. For you guys that have been following me on a consistent basis. In last week's Forex market preview video, I showed you guys what I was waiting for on the pound dollar. Syndicate members, I kept you guys updated as this week started. Well, price action had finally entered my kill zone, and I was looking for an opportunity to get short, and unfortunately, the market started moving without me. I woke up about 6 o'clock this morning, looked at my charts, and price had already rallied down so far that it was too late for me to enter and still maintain the risk reward requirements that I wanted. Fortunately, my trading buddy, my good friend Jason Greystone, who trades the London session, well, he was wide awake at the time and he was able to take advantage of that trade and really catch about 100 pip move straight down. So cheers to you, hats off. And well, if that wasn't bad enough, there was another missed opportunity in my live trading room today on the pound yen. For some reason, I missed the opportunity in my morning analysis. And well, one of the benefits of having a live trading room is that we have more eyes on the market. There are about 30 traders in there, 30 to 50 traders in there each day. And I would say about half of them are pretty experienced traders. So about 10 to 15 pretty experienced traders in there. And well, early on in the session, one of the traders shot me a message, shot the group a message, said, hey guys, check out pound yen hourly chart. We got an at market buying opportunity right now. So I stopped what I was doing. I went over, I loaded up the chart and I saw that, you know what, it looks good. Of course, I didn't blindly follow that trader because that's something you never, ever, ever want to do. But I did my own analysis quickly. Price had shot past the original entry, but was hovering a few pips above. And well, I do have a rule about entering late. I don't do it. So what I did was I put a limit order, a buy limit order right at the initial price point that I want to get involved at, hoping that the market would come down and retest it. That's typical in price action. We bounce around a little bit before exploding up. Unfortunately, in this particular opportunity, price action did not give me that retest. It went 50 to 60 pips straight up, leaving me on the sideline like that. And it was unfortunate. It happens. I didn't lose any money, so it could have been worse. But hey, that's trading for you. Now, that same opportunity ended up turning into a very, very, very valuable lesson later as right when we were about to end our session, a trader typed in. People were talking about how much money they made. They were teasing me, let me have it. Hey, Akil, I made 50 pips here, made 100 pips there. You know, just good old trader talk, little back and forth bragging or whatnot. And there's another trader that said, hey, yeah, I made 20 pips off that trade. I said, oh, 20 pips. Why did you only make 20 pips? And then it generated a discussion about how this trader had entered the trade late. And well, I'll share a few of the footage, but we had a really good discussion on why that is a bad thing. And what's really cool is how the rest of the community of traders came to support this trader. You know, typically on trading forums or on Twitter, on the internet, when you do something dumb or you make a mistake, everyone's quick to pounce on you and bash you and discourage you. And you do need to be made aware that what you did is wrong, but you don't need to be beaten down. This trader was already feeling pretty bad. She knew what she did and was like, yeah, all right, you know, we don't need to push her into the ground anymore. But as this discussion went on, it was really cool to see our traders reach their hands out and said, hey, you know, don't worry, I've been there. I've done that too. Hey, me too. Hey, did that yesterday. And just that sense of community, that sense of support really helped this trader take herself from a place that was pretty bad to a place where it's like, yes, I made a mistake, but it's not the end of the world. I can still recover it. And that's the value of positivity. That's the value of surrounding yourself with like-minded individuals and people that want to see you succeed, right? There's so much negativity in this world. Most people want to make you feel worse because you're doing something that they're afraid to do. When you can surround yourself with people that are positive, where they're climbing the same mountain to success that you are, and instead of looking down at you and laughing or trying to kick you back down, they're reaching a hand out and saying, hey, come with me, let's both get there together. It just helps everyone become successful that much quicker. And it's really needed, especially in an industry like this, as frustrating and as strenuous in trading. So enough of me talking. I'll share a few of the footage. I hope you guys enjoy. And if you've ever been in a situation like that, my kid's giving me the cue that I need to wrap it up. If you've ever been in a situation like that, just do me a favor, leave a comment below. I think it'll be really beneficial for other traders watching this video to kind of see that, hey, you aren't alone out there. We all do dumb stuff. We all make mistakes. What matters the most is how we recover from those mistakes. So let me know, guys, and I hope you guys enjoy the footage. Scroll to my charts a little bit late. Seriously, if we would have got any type of retest of that zone instead of just a bump and run, I would have been filled because we weren't that late. Our trader got Renee says I got 20 out of it. Why only 20, Renee? Why only 20? Yeah, congrats. Literally seconds late. Literally. Missed the beginning. So you entered late. You entered 30 pips late. Now let me ask you this. Why? Why did you feel as if it was okay to enter 30 pips late? Was it just the pure fact that you wanted to be in the trade? You didn't want to miss the move? FOMO? Fear of missing out? Was that it? I was about to enter the trade when someone came out, but that doesn't make a difference. Why was it okay to enter late? Does your trading plan say that it's okay for you to enter 30 pips late? Have you thought about the risk reward at all? Based on analysis, it was legit. Second guess myself. So based on your analysis, you're allowed to enter 30 pips late. I'm not asking if it was a valid cipher. You were allowed to enter that many pips late. No, but beforehand doesn't matter because the trade. We're not asking was it a valid trade. It was a valid trade. The discussion is you entered 30 pips late. And I'm trying to figure it out if that is rule-based, if that's something that you are allowed to do on a consistent basis, or if you did it because you saw the trade, you saw it was moving, you didn't want to be late, you didn't want to miss out on it, so you pulled the trigger in fear of missing the move. Which one? The analysis didn't want to miss it. Now, did you consider your risk when you did that? Because let's take a look at things. Typically, ciphers have an inverse risk reward to begin with. So we're looking at our cipher formation here. And let's measure out the initial risk reward on this trade, right? So initially, entries are at 147.40, right? Where did you enter at, Renee? So your risk reward looks something like this. Now you tell me. Good area to get out with, by the way. Good area, avoiding the psychological number. But you tell me. Does anything seem wrong here? I based it on entry for the stop. So your stop loss was at the entry. That's what you're saying? Okay. Why? Why was this a good stop loss? then why'd you do it? If you knew it wasn't a good stop loss, why'd you do it? These are the mistakes, guys. These are the mistakes that will kill us as traders. This is why we can't let emotions get involved. I had to base it on something without having a risk reward. But here's the thing, yeah, it's not based on anything. If price action would have returned to that entry, would the pattern have been invalidated? No. There was no rhyme or reason for putting a stop loss there, other than it was something that you created to justify it. And we do that a lot, guys. Renee's not the only person. We all do it. We all take action. We know we shouldn't be doing it, but we'll justify it somehow. Daniel just said, I've done it plenty of times. Tom says, yep. John says plenty, right? Our live room members here, we're all doing it. So you're not alone. And this is what I love about this community. It's an honest community. It's not a trading forum where everyone's just ramming on you and saying, oh man, you're a dumb rookie trader. No, we've all done it. I've done it plenty of times. That's why it seems like I'm in your head. Many of you guys are always like, Keel, how did you know that's exactly what I was thinking? Because I did the same thing. I come from the same place you guys come from. There are going to be missed trading opportunities, right? What we want to control is risk, right? Missed trading opportunities won't cause us to go broke. We can't lose money on a trade we don't take. However, when we miss a trade and we get in late, we often put ourselves in a much more riskier position. And we give ourselves the opportunity to lose more money than we intended. And when that happens, right, we're shifting away from the plan. We're shifting away from being in a situation where our winners will cover our losers, where one win will make up for every 1.5 loser. Now our losers are taking away from our wins. And that's why you see traders where it's like, man, Akil, I had a great week. I won 3 trades on Wednesday. I lost a trade on Thursday, and now I'm back to break even. Why are you back to break even? You had 3 wins and 1 loss. It's because of that big loss. And what makes it worse is when that big loss is a trade that you know you shouldn't have been in the first place. Because now it's an unnecessary loss. Sometimes there will be losses, big losses that suck your profits. That happens. We want to avoid the unnecessary losses. Because when we're back testing and we're building our plan and we're figuring out our expectancy, are we taking account unnecessary losses? No. We're only tracking the natural losses. We don't want to sabotage ourselves any extra. Good lesson. And again, you're not alone. You are not alone. As you can tell by the traders that are coming in to reach their hand out and give you support. That's why this is why the live room is powerful. It's not like the rest of the internet where traders are kicking feet down to try and kick you down the hill. We're reaching hands down, patting you on the back. Hey, you did something dumb. It happens. Remember in my sports day, same thing. You do something dumb on the football field, right? If you have a good team, they embrace you. They say, hey, man, okay, yeah, it's okay. We all did it before. Let's worry about the next play. A bad team is the one that makes you feel bad. Bad teams don't win. Good chemistry wins.